sure you guys have heard that there is a market crash coming. So when is it coming? Nobody knows when it's coming. But today we want to be able to talk about what happens if it does come or whenever it does come. How can we be prepared in that situation? So let's talk a little bit more about that today. So what's up, family? Welcome back to the channel. Feel free to like and subscribe. On this channel, I like to talk about money. I like to talk about investing. I like to talk about how you succeed, whether you have a lot of money or maybe you don't have a lot of money. We like to put our money to work, right? Let's put our money to work, because if your money's not working for you, then what is it doing? We're not about lazy money on this channel. We're talking about putting our money to work. So a lot of times with the stock market crash information, especially being put out by the media, it typically only pumps fear at people and things like that. But understand, even with a market crash, there's always a way to be successful. Understand that even in a market crash, people still make money. People still make money, but a lot of times you don't hear a lot of people talking about, well, how do they make money, especially in the stock market when the stock market's crashing? Like, what they do? Well, there's so many different strategies, different things that people do, like especially if they're like, shorting the market or shorting stocks, which I'm sure that some of our, more wealthier friends are doing. They're betting against, the market going down because of statistics and just trends that say a market crash normally happens, or just based off of different metrics that we see happen in the market now. Now, you don't have to be somebody that gets hit and you just lose money and you feel in all types of ways, your emotions during a market crash. No, you don't have to be, because you watch this video and we're going to get you straight. So basically, a lot of people are speculating that there's a bubble. Now, if you watch any of my videos, I think that there is a bubble, but not the entire market. I think there's different sectors and bubbles because we are shifting. Now, back to the bubble. So basically, a bubble is basically saying like, there's a lot more money in something than it's worth. Or let's say, for example, like a stock price, like a lot of people call Tesla a bubble. So a lot of people say, well, the price of the stock is just not the same value of the company. So that's what a lot of people believe. Versus, well, maybe it's just that Tesla is a new market where things are shifting to. But we'll talk about that a little later. So now, basically, a lot of people think that at any point this bubble is going to burst, just like the housing bubble that burst back with the adjustable rate mortgages and the asset-backed mortgages and things like that back in 2006 through 2008, 2009. Now, granted, we have been living in a very interesting time, which has just been crazy, because even in the pandemic, we've seen just, some weird reactions happen in our economy. For example, real estate is up and through the roof and more expensive than ever, in particular because the rates are, ground floor low. You have unemployment higher than ever. You have homelessness doubling, tripling, quadrupling, and even more in different areas. You have more money being printed than ever before. You have the government that had put all this money from the first stimulus package, into the bond market by buying all these junk bonds from banks. So that kind of put a lot of money and billions of dollars within the market as well. So it holds things up on some side as well, all the way to our margin. The amount of stock people are buying in margin right now is super high. So that means you have a lot of people borrowing money to be able to buy stocks and buy more stocks. Now, here's a quick note. If you're in margin right now, one of the things that you want to start doing is you want to start getting out of your margin, especially if you can't take on any type of debt like that. Because if the stock market crashes and you're holding on this margin, if the stock market crashes, it's very easy for you to find yourself totally upside down in a matter of just like that, because you're holding on to so much margin. I'm not a fan of margin at all for so many different reasons, and I don't even like the fact it exists within the investing sector and it's promoted to people, because you have a lot of people who may not understand margin that gets in the margin and then they get hurt and stuff like that. And I understand that, yes, it's positive for some people, fine, I get it, but I just personally don't really like the concept of margin. But even though in a stock market crash or in a potential stock market downturn, one of the things you do want to do is you want to decrease your margins or get out of margin altogether. Stop being greedy, get out of your margin. Now, in this time, we have seen so many different things, right? So we do have those areas that, there really is no value where it's been blown up. It doesn't make any sense, right? Just the way things have gone and the way things have been, just growing. Like almost anything is growing, especially the SPACs. The SPAC market, like most of them just do well, period. Like as far as just like initially, like the stocks, they just go up because, people are running to it. Now, granted, that type of volume might not be a bubble, but like what happens is like you have a lot of people that are now really, really, really interested in investing, especially in this pandemic. and the things that we just seen happen with GameStop, AMC, more people have really been driving and trying to learn about stocks, trying to learn about cryptos and things like that. So you have a lot more money that is aimed towards the market. Now that's very real. Now the contributing factors also that may play a part is, what happens with our stimulus plan, if they're putting out more money and et cetera, because once that money stops, it stops. So there's different factors that we really don't know exactly how much may be affecting the market, because you can't track how much people have taken exactly from their stimulus money and put in the stock market, for example. You can't really track that. As well as a business, if they've gotten a loan from the government, an SBA loan or a PPP, how much of that money was actually put into the stock market? We really don't know those numbers, but there's different factors. And so I think we're in some of the weirdest or most interesting and some of the best and some of the craziest, some of the most up and down times that most of us have ever lived in. And so I don't think we can totally rely on just one metric of how things are working in the market to be able to determine what happens next. One of the things about stock market crashes and things like that and trying to time the market is timing the market is hard, right? You're going to have somebody, whenever we do have a market pullback, or if we ever do have another crash, of course we kind of see that from different perspectives of how things are and how things are going, and everything's going up, 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 up. And the more that people are being greedy, like as Warren Buffett said, that's when you should be kind of hold on, a little fearful. Now, even though we see this, we don't really know how this will work with the pandemic and the shifts that are happening. For example, let's talk about the shifting. So a lot of times the shifts that I talk about are more per se when money leaves one area, it goes to the next. So an example is if you used to have, cassette tapes and CDs, well, that money in buying CDs has kind of left and it's kind of went to, more streaming, right? Because I don't know when the last time you went in the store and you actually bought, the next hottest album on a CD. Do they even have those CD, aisles anymore where you can go in there and look for artists in the CD? I don't even think they exist anymore. So more modern day, for example, as we're starting to see the shift go from your regular gas industry, gas guzzling vehicles, to the electric industry, or the shift that's happening with the alcohol and the nicotine tobacco industry and cannabis, right? Or the shift that you're seeing from the regular retail to online retail. There's a lot of different things happening, a lot of different shifts happening to where the money's literally just leaving one sector and going to another. Just like we talked about the movies, right? So you go people from sitting in the movie theaters and going from that to more streaming, right? So we've seen those shifts and we've seen those different shifts. So money's just leaving one place and going to another. Now those type of things, there's really no bubble around it. It's just there's a change. But now when you concerns things we just don't understand why these things are going up and all this money coming in, there definitely is a bubble that is within the market. And so don't know how harsh the downturn or crash can be. It could happen after, all the stimulus money and stuff. But what happens if all of the stimulus plans and stuff are over, because now we're, things have changed, we kind of get back to normal, and then, business still goes up. We don't really know, but that's neither here or there. The goal is to be prepared if it does happen, not react to it, but let's be proactive. That's the goal. So yes, there certainly are some places where there is some overvalued areas. And so one of the things you have to be careful with the media, they're very smart. They're very crafty. And even some of these articles people put out, because people will be telling you oh, don't do this and don't get into that. And the whole time they're telling you that, they'll be buying it. They'll be buying it up and telling you just don't get out of it, sell it, and they're buying it behind the scenes because they know it has real value. So you always have to be careful who you listen to, especially the media. It's a game that they've played, for a very long time. Media was created off of playing games, but that's a whole nother conversation. So let's look at some strategies. And some of these strategies are not just stock market strategies, but also just practical strategies. All right. So let's, for example, in the stock market, if you're doing a whole lot of trading, well, in a market crash, if you're just buying the actual stock and you're just trading on the stock going up, that might be very difficult in a market crash, because of the fact that, any moment that stock can be up and just drop like that. You can have your trailing stops and things like that. But one of the things is that you just want to kind of start shifting. So if you're making money from your trades and things like that, make sure that you're taking a percentage of that Of course, yes, pay your taxes, but make sure you're taking a percentage of that and being able to put it, away, maybe save it or move it into like, a stronger long-term, dividend income type of play, or should I say investment? Because, one of the things when you're trading, no emotional attachment. When you're investing and stuff, like understand that you're also buying a business at the same time. So being able to take some of your money and put into, stronger companies, like especially if you already have a portfolio set up, take some of those profits, and be able to, break it down in different percentages so that way you have some cash on hand, but then you also have some money going to some of your stronger, investments as well. Because in a stock market crash, that's what you want to look for. You want to look for companies that are resilient, companies that are strong, tried and true, long, big companies that you can invest in. And because once the market's coming down, like for a lot of us that really understand investing, like we're not necessarily like upset because the market's coming down. We like to see cheaper prices, especially cheaper prices on our long-term investments. Like, for example, I talk about Tesla here and there on this channel. And so, for example, like if Tesla came down from $800, $700 a share to $400 a share, I'm not fearing anything about Tesla or like, oh, it's going, see, I told you Tesla coming down. I ain't paying attention to none of those people. I'm going to put more money into Tesla because I'm excited to be able to buy a company that I really like at a cheaper price, right? So it's just like any long-term investment. I just use them for an example because now in a market crash, your money that you make, it's more powerful. It's not weaker, it's powerful because now you can buy more of a stock or more of a company or even more of a different fund than you could because now it's a lot cheaper, right? So how you shift your money is highly important. And in a market crash, you do want to kind of have some access to cash so that way that you can be able to partake in being able to invest in, companies that have, ran down and things like that, but they're still a good company. There's a difference between a stock that's damaged. There's a difference between a company that's damaged because you can have a damaged stock but have a great company, but then you can have, a great stock and a bad company, right? That's not where you want to be at, right? As far as long-term investing or what have you, that's not where you want to be at. That's kind of a concept that Warren Buffett talks about, and it's very real. So that's one of the strategies that you want to do. Now, of course, right now, high interest savings, doesn't really exist right now because of the rates. So a lot of the interest rates have came down significantly because of interest rates. So yes, when you're holding cash, you may not get the best return on it, but you just want to be able to have some cash for several different reasons. But as far as investing, so that way you can at least be able to put some money into these long-term big companies or your favorite companies that you've been really wanting to get in, or maybe that you're already in, and be able to buy more of that and buy more of that business. Another thing you also want to be looking to do is looking to, get out. If you're in a position to be able to start taking some of your money to kind of get out of debt, now's a really good time to work on getting out of debt. So that way that you don't hold a lot of debt in an economy crash or market crash. Because if whatever happens, it can trigger so many different things and cause people to lose their job. So let's say, for example, you lose your job and you got stuff you can't pay for, especially like a vehicle, your vehicle can be repossessed, stuff like that. So you want to start lowering and trying to work towards being able to get out of debt, as much as you can, depending on your budget. I know everybody doesn't have the budget of being able to get out of debt or be able to really, put a lot of money, but whatever you can, start trying to find different ways that you can do that. And one of the things you can do is you use the snowball effect by looking at, what's your cheapest of debt and start working on things like that. Because during a market, you don't really want to have a whole lot of debt, which leads to another thing to think about also is, listen, having a side hustle or having a skill or something that, you can get paid for, you can make money from. One, in case you lose your job, or if you're in a situation like that where the market has affected, companies close down. For example, the pandemic, all those restaurants and different stores that closed up, that just puts people out, like they don't have any more income. But if you have a way to make some side income, that's definitely something that I definitely encourage. Even if things are good, I encourage it. As well as you want to be able to have something to where you're able to still generate money, even if you don't lose your job. Being able to have another way to generate more income, that helps, especially if you're really serious about investing, you love investing, being able to generate some income to help you get more so out of debt and being able to, be able to invest in more things. That's definitely a good thing to think about as well. So ultimately you want to be able to be prepared just in case. We're not going to do this in fear. I know a lot of people have been talking about it, and people have just been fearing a crash, or like, I'm getting out of stocks, so I'm just moving my money, I'm doing this. No, we're not going to do this in fear. We're going to do this in a strategy, because I'm telling you guys, some of my best investments have came in, things like at the beginning of the pandemic, or for example, like back in during the recession. Like I had started investing like a year and a half right prior to the recession, and I made some of my best investments during that time. Now, one of the things we have to also consider, and I should have mentioned it earlier in the video when I was talking about the different, the shifts and the bubbles and where it's shifting, is also just how we're coming to a new normal of different things. So those factors play into where the money is moving, within the market and just in our economy. So those are things that you pay attention to and you watch. So just because it's a market crash, it doesn't mean that there's no opportunities. It means that there's a ton of opportunity. And pretty much that's how we like to think about it, and that's how we see it, because that's the reality. Because during a market crash, you'd be surprised at how many people make millions during that time. It's a lot of times people just don't talk to you about how they do it, or maybe they set themselves up to make millions of dollars during that time. So a downturn or market crash is not a time to run and be afraid and to be fearful and just burn the bridges and just forget everything and run and all that stuff. No, it's just some more time to be more strategic. But hey guys, let me know if this video has been helpful. I'd love to hear your comments and your thoughts. Feel free to like and subscribe and stick around, and I will talk to you guys in the next video. Y'all have a good one. Peace.